Hello, it's Brian Shannon from AlphaTrends.net. Today's Friday, June 13th, 2008, and the market's closed for the week. It was a tough week for the bulls, and we'll get to those numbers here in a moment. But for today, the S&P 500, the spiders closed up $2 or 1.5%. So nice snapback rally here, but it doesn't change the fact that we are in a downtrend and that long positions remain riskier than any corresponding short position would be. There are, of course, some select issues that are going higher and breaking out. I was in Tim Sykes' little online room today. Did a great job in there with his live video all day, which is a tough thing to do. And I was talking about BQI. I had mentioned at 485 I was buying it and buying the calls as well, the June 5 calls. I bought those at 15 cents and sold them at 45 cents as the stock rallied up there. So there are still some good trades out there, and you've just got to be alert and know what you're looking for. And that's, of course, the subject of my book, if you haven't bought that yet, at technicalanalysisbook.com. The S&P 500 here we see early on I posted a chart on the blog showing that it was doing battle with the declining 5-day moving average, and it did battle with there for quite a while today. In fact, sold off hard from there for a short period of time, nearly $1 from 136 down to 135, and then late day we saw another surge in buying. So it looks like the worst is behind us for this leg of the downtrend, but it doesn't change the fact that this daily time frame is still in a lot of trouble, and of course the weekly time frame we have a very bearish picture as well. So on the let's go back to this 10-minute time frame in here. You see that the market made this higher high right here, and then as it pulled back and then rallied, now we have a higher low to correspond with that. We've got the stock, the market that is that's done battle with the declining 5-day moving average. That level probably ought to hold as some short-term support right now at about 135.5 or so. And then below that, we've got the 135 level, which is a bigger level overall. So 135.5. I still think that we're probably going to retest at least this 137 in a quarter level here before this little rather this counter trend rally is run its course. But you can see here that that's where it broke that downtrend line as well. We've got the higher high and the higher low. So short term we're in an uptrend, but we've got a much bigger bearish picture, and you've got to be quick and nimble to be trading in this environment and be in the right stocks at the right time, obviously. The Russell 2000 today was up $1.33. So that 72 level did hold as support for the week, which is a good thing because, as I've been saying, I think a break below 72 would lead to a larger price break. We saw that the uptrend was broken here, but we're back above that line. So we had a little shakeout below the 50-day moving average. A lot of times these these little shakeouts will continue to bounce a little higher. And I'd said yesterday I didn't really expect it to get back above 73, but 73 was taken out. So we close at 73.35, and now maybe we can look for the market to come up to the conjunction of the 10 and 20-day moving averages. There's a possibility that we'll see sellers there or near that $74 level at the 200-day moving average. So I think in 73.80 to 74.15, we have the potential for further selling as it gets up towards that level. But for now, picking a top in a short-term rally is a guessing game. Right now, we've got this pattern of higher highs and higher, our first higher high right here with a higher low below it. So if you are trading the long side, the right way to do it is with a stop below here, because that would be breaking below this level at 72.40 or so would invalidate the definition of an uptrend. The definition of an uptrend is higher highs and higher lows. Well, we see the higher high and the higher low, so now we've got an uptrend on this short-term time frame. And this should be your cue to cover your shorts if you've had shorts, and look for potential where the market can rally up to before it's likely but not guaranteed to find resistance. It's just these are potential levels of resistance. We only know support or resistance after the fact. And right now it's looking like 73.80 to 74.20, 74.15 is where it's likely to find some 73.80 to 74.15 is where it's likely to find resistance, but we'll see what happens. Right now we expect the trend on the time frame that you're trading, and on the short-term time frame, again, that went positive here today with this higher high. You can see the 1-minute time frame is pretty choppy action, but late day we had some nice buying in here, and with some good volume here. We had that nice big volume move here, followed by a slight consolidation on low volume, and then the buyers came right back in at the close once again. The financials, let's take a look there. The bad news always comes out at turning points. So, was that the worst? We'll know in hindsight if that was the worst, the Lehman Brother news. But this is the Lehman low, and this is the Bear Stearns low. It's interesting that we get all this bad news, and then that's when that's when the smart money covers their shorts. It doesn't mean that I would be a buyer in here. So, hindsight says, yeah, it would have been a nice buy over here, but the risk management is tough in that case. If you're trading XLF on the long side, here's where the only place it would have made sense on a short-term time frame to trade long was above 23.15 or so, and here's our higher low. So right now, what invalidates this is a move below about 22.70. Breaking back below 22.70, and this short-term uptrend that we see developing here will become invalidated. And the key is to get involved as the new trend emerges, like we're potentially seeing in here. But with a market in such a deep downtrend, I don't trust them enough to hold them. For me, it's just it's better to be on the sidelines and cash and say that's not my style. I like to see when the market is, when the trends are aligned on multiple time frames, and that's what we saw in BQI today. Is that we've got a daily uptrend. It broke past some important resistance here. 13 million shares are short this stock, and it rallied nicely higher. And on the 10-minute time frame, this is really where the buyers took control. Right in here at about $4.80. I got on it late, but it wasn't too late, and that's the key, is to get involved before it's too late, and avoid chasing it and being the guy who buys it at $5.40 late in the day. The NASDAQ 100 did battle with the rising 50-day moving average, and it closed 2 days below there and shook some people out. Today we had lighter volume and a rally, so in a market that's basically rolling over, but it is back above that 48 level, that 47.75 to 48. So this might indicate that this market, rather than dropping altogether, which a rising 50-day moving average doesn't favor the odds of a continued sell-off, it's more likely that we're going to see a correction through time rather than price. Short term, we've got an uptrend in here as well. We had this high right here breached, and then we had this low here, of course, and then we had this is what's now the higher low at about 47.70. And again, I think it's important on the weekly time frame and on the month. What I was talking about earlier in the week was this. What the potential was a breakdown below this level. Well, it's back up above that level, so you can't just hold on to your bearish thoughts. You have to look at the market and say, well, what's more important, what I think the market should do, or the message that the market is sending to me? The message the market is sending is higher highs and higher lows on the short-term trend. You've got to respect that, and remember that money management, risk management is job number one.